This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus has delayed a ministerial meeting expected to discuss oil output cuts to November 30th from November 26th as producers struggle to agree on production levels and hence possible reductions, OPEC Plus sources said, a surprise delay that sent oil prices sliding. 3 OPEC Plus sources said this was linked to African countries. OPEC Plus said after its last meeting in June that the 2024 output quotas of Angola, Nigeria and Congo were conditional on reviews by outside analysts. Sunday's meeting of the OPEC and allies such as Russia, known as OPEC Plus, had been expected to consider further changes to a deal that already limits supply into 2024, according to analysts and OPEC Plus sources.
China's oil demand growth is likely to ease in the first half of 2024 to around 4%, according to consultancies, with resurgent consumption from the aviation and petrochemical sectors offset by weaker diesel usage due to an ongoing property sector crunch. Slowing demand growth for the world's biggest oil importer comes amid what remains an uncertain outlook for the Chinese economy and as travel patterns normalize following the post-COVID rebound earlier in the year. The OPEC foresees Chinese demand averaging 16.41 million barrels per day, BPD, in the first half of 2024, up 3.2% on 2023 levels, while the International Energy Agency, IEA, forecasts demand averaging 17.1 million barrels of oil per day for the full year, to show 3.9% growth.
Moving on to the top news in the energy sector.
The current $800 billion invested annually in the global oil and gas sector could be halved by 2030 if a goal to limit global warming to 1.5 degrees Celsius is to be reached, the International Energy Agency, IEA, said in a report Thursday. The report added that no new long-lead-time oil and gas sector projects would be needed if that goal were to be reached, and some current projects would need to be shuttered. The highest emitters in the global oil and gas industry have vast potential for improvements, the IEA said, as they face choices amid a climate crisis fueled in large part by their products.
Australia will step up spending to underwrite new wind, solar and battery projects, Energy Minister Chris Bowen said on Thursday, looking to lure investments to stabilize the energy grid as coal-fired plants retire. Bowen did not specify how much the government expects to spend on the program, designed to drive investment in 32 gigawatts (GW) of new capacity, or around half the national electricity market's existing capacity. The move comes as the industry is struggling to meet the government's target for 82% renewable power by 2030 from around 40% now due to challenges in expanding transmission networks to handle new renewable projects located far from demand centers. Next, we have the top news in metal markets. China's state planner said on Thursday that it would closely monitor changes in the iron ore market and further tighten supervision of spot and futures trading in its latest effort to curb a rally in the price of the key steelmaking ingredient. The National Development and Reform Commission, NDRC, said it met with iron ore trading companies and futures firms to understand their activity in the spot and futures markets after a continuous and rapid rise in iron ore prices. Despite weaker domestic demand for steel, the benchmark December iron ore contract on the Singapore Exchange has climbed by 22% since late October, hitting a 9-month high on Wednesday.
Another large inflow of zinc arrived in warehouses approved by the London Metal Exchange, LME, meaning the total has more than tripled in about a week to the highest levels in over 2 years, LME data showed on Wednesday. The sharp rise comes amid a background of oversupply of the metal mainly used for galvanizing steel as weak economic activity hits industrial manufacturing, especially in Europe. Last week saw a big rise in LME zinc arrivals after months of dwindling stocks, which 2 sources with direct knowledge of the matter said was due to Citi delivering zinc in a potentially highly profitable rent-sharing deal.
We will now look at the top news in the agricultural sector.
Ukraine's efforts to revive sea exports in defiance of Russia's military blockade have given a glimmer of hope to a teetering farm sector in which loss-making producers are abandoning some land in one of the world's biggest grain belts. With no end in sight to the war with Russia, Access to the Black Sea is critical if Ukraine is to preserve an agricultural industry that was the fourth largest grain supplier globally before the conflict and in value terms accounted for half of Ukraine's total exports last year. While makeshift export routes and abundant supply elsewhere have tamed record global food prices since last year, the strain on Ukrainian agriculture has worsened as a UN-backed export deal collapsed and EU neighbors balked at land shipments. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.